it for yourself. Um, so go ahead and get this thing started. All in one in-depth trading training. My name is Joshua Wheaton. For those who may not know, I'm pretty sure all of you guys do know. I have been a trader investing for over 2.5 years now. And so, with all of my trainings like this one, my goal is entirely to give you guys the things that I know, the things that I've learned in a more simple and easier to understand fashion, right? So let's go ahead and get directly into it. So the first thing we're actually going to talk about, right, because majority of us, we've either got started with the FRX Academy, the e-commerce academy, the travel membership. Most of us on this call are also investing within the foreign exchange market. So what I want to do for you guys is give you guys my bad, guys. I just got a text message from a member. Said she just got a new phone. Is she on this call? Okay, cool. So, as I said, a lot of us, most of us, you guys are investors within the foreign exchange market. So what I want to do is give you guys that re-understanding. You might have watched that first video, and was just, watching the videos to try to get over them or get through them without, fully understanding everything. So the foreign exchange market, you guys, is a global decentralized or over-the-counter market for the trading of currencies, right? So what we do is we invest into different countries' currencies. This market determines foreign currency exchange rates for every currency, right? It includes all aspects of buying, selling, and exchanging currencies at current or determined prices, right? So based off of different economies moving, right? Sometimes you'll have the president go up and speak, and that will allow the US dollar to fluctuate in price. Sometimes, and interest rates and other things that happens within the economy that affects our money affects what's happening within the foreign exchange market. And this happens with every single country all around the world. So us as investors, we have the ability to profit off of the advantages of these currencies changing in price. And that's what I love most about the foreign exchange market, is simply that, when you get into this market, or you're an investor in this market, you actually, you can make money no matter what. When it comes down to investing in the stocks, there's a such thing as a company going out of business. There's a such thing as a company filing for bankruptcy or things like that. And that could play a major role in your investments. And most with stocks, you could trade options, but most of the stock investing is long-term investments. You putting your money in, hoping that that company does well so that you can make money on the back end. Within the foreign exchange market, no currency is just going to disappear, right? So we are very, very pretty much secure. This is the only, listen to me and if you take notes, write this down. When people tell you, oh, the foreign exchange, this, that, blah, 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 this is the only recession-proof market, which means if the United States is going through a recession, that does not matter. This market is not stopping. It's not changing. It's not going to fail, right? I seen somebody just fell off the call now. Like I said, you guys, the meeting is locked, so you won't be able to re-enter. So make sure that you don't fall off. Next, I want to break down to you guys very quickly, right? What is MetaTrader 5? I know some of you guys started, we set up this account, that account, but you don't really understand specifically what MetaTrader 5 is. So MetaTrader 5 is also known as MT5. It is an electronic trading platform, right? Understand what I'm saying? It is a trading platform. So for example, right, you could sports bet. Right, I just made money today sports betting. Big shout out to Rich. But you can make money sports betting, right? The sport isn't, it's not the platform, right? You got FanDuel, you got all of these different platforms that you can use to invest into, or, bet on different sports and what's going on in the market, right? But this is not the market. So MetaTrader 5 doesn't control what happens within the market. MetaTrader 5 doesn't even control, it does not, like, you can't really like throw money into MetaTrader 5. You have to put money into your broker. And we're going to talk about that. So MetaTrader 5 is simply just the platform, and it is widespreadly used, pretty much all around the world. A lot of traders use it. They either use MetaTrader 4 or MetaTrader 5. MetaTrader 5 is simply just a newer version with, better perks, in my personal opinion. I've used both, right? So now let's talk about what is a broker and why sway markets, right? A Forex broker is a financial service company that provides traders access to a platform for buying and selling foreign currencies, right? The broker is so important so that you guys don't have to be the individuals traveling to these different countries' currencies to invest it. They're pretty much handling the electronic transfers for you, right? So we as a community, we use Sway Market simply because it is an all-around safe broker that we've actually been using for all of our new investors for a while now with no problems, right? So you have safe spread. Spread simply means that when you're investing, right, your spreads play a role in how much money, you know how you go into the trade, right? You could take the trade, you do a 0.01 and you might start off negative 15 cent, negative 20 cent. If the spread was higher, you could start off at negative $5 with a 0.01, right? So the spreads determine so like when you get into the trade, this is what happens, right? When you get into the market and you're investing your money, the reason why you start off in the negative is because the brokers are taking their fees first. So the market might be right here, but because you're getting in for a buy and the broker wants their profit, they're going to enter you into the market at a lower point. So you enter here when the market is actually here. And so now when the market starts to go up, your entry is kind of like lower so that they're making their profit. So it's automatically going in the negative. And now you're going to pretty much, actually, if you're getting in for a buy and the market is here, it's pretty much going to enter you here, right? So you got you're at a disadvantage from where the market actually is. And that's what spreads do. It's like pretty much how far, you are from your entry from what the market actually is right now. Right. When it comes down to sway markets, we also get fast withdrawals, you guys. I've used brokers when I first got started, and withdrawals took days sometimes. I've heard of people putting their money into a broker account, not getting their money in weeks, or having to continue to hassle with customer support. We have 24/7 customer support, multiple different assets available that we can invest into. You can invest into the foreign exchange market with sway markets. You can invest in the crypto. You can invest in the companies, indices, all of that stuff. Right. And then there's also a low cost startup. You could fund your broker account with as low as $10. Do I recommend that? Not at all, right? We're going to talk more about that as well, though. So that's what a broker is. The broker is simply the middleman between you and the market, right? They're pretty much just accepting and making the transactions. And then your MetaTrader 5 is what you connect your broker to so that you are in control over what you're choosing to invest into, right? So let's keep it pushing. Now, when it comes down to investing, you guys, the most important thing that's needed to make money is to understand buy versus sell. That's the only way you make money in the market. You can't make money in between buy or sell. It's buy or sell. You got to do one or the other. So when you're trading, you only look to buy when you're expecting the market to move in an upwards direction. Right? So what does that mean? If I'm looking to make money off of the market going up, I want to get in down here. And once the market goes up, my money is being made. If I'm looking to make money off of a sale, if I'm looking to take a sale, the only time that I'm going to make money in the market off of a sale is if the market goes down. So from the time of me entering the market, let's say I enter right here, I need the market to go down from that point for me to make money. So that is the major difference between a buy or a sell, right? A buy, you're looking for the market to go up for you to make money. A sell, you're looking for the market to go down for you to make money. Next, let's keep it pushing. Now let's talk about something a little bit more in depth, market structure, right? So when it comes down to understanding market structure, you guys, you have uptrends. Uptrends consist of a low, higher highs, and higher lows. The market is always going higher. So let me, break this down. So you got this low right here. This is the start point. Then you got the market going up to a high. The market has to go up and down, right? The market is always going to go up and down. So it's not a matter of just the market going straight up like that previous line that I showed y'all. The market is going to be in an uptrend, but within that uptrend, it's going to be ups and downs, ups and downs. Within that downtrend, it's going to be downs and ups, downs and ups, downs and ups, right? So when it comes down to an uptrend, you identify your uptrend by the market becoming higher, right? The making newer highs or higher highs and higher lows, I should say, right? So market is at a low. It made a higher high. This is the highest point that the market has ever reached. Then it dropped down and made a higher low. This low is higher than this low right here. So this is a higher low. The market goes up. It created a new higher high. This high is higher than that high. This one created a new higher low, right? And then a new higher high. So that's how you identify an uptrending market. And I might even, if we got time, I know I got something to do right after this. So I'm trying to move fast and also make sure that you guys understand it as well. Then you have a downtrend. Your downtrend is simply the complete opposite. The market starts at a high point, it makes a lower low, right? This is the lowest point that the market has reached. Then it creates a lower high, right? This is the highest point from here, but it's still lower than this previous high. The market drops down, create a lower low. Then you have a lower high, then a low, right? So the market is going down in that trend. And then you have another form of market structure called consolidation. And this is when the market is pretty much not making a trend, right? It's up, down, up, down, up, down, back and forth without making a big move in the upward direction or a big move in the downward direction, right? And so these are like the basic understanding that you guys need to have when it comes down to market structure. And even as an investor, like I told you guys, we want to buy when the market is in an uptrend. So how does that pretty much look, right? I'm looking at the market right now. Let me go back. And why I do that as soon as I click the pencil, right? So let's say, boom, we're looking at the market right now, right? And the market is right here. I don't just want to get into the market at a point where I didn't see any, like the market, getting into the market is all about confirmations, right? You want to make sure that things actually line up. So within this, let's say I'm looking to get into this market for a buy. I first want to see the market move in an upward direction, and then I want to see a pullback. And I get into my buys at a pullback. I had a member, he was watching some videos and he's like, I thought I'd get into the market for a buy when the market is going down. And not necessarily down, but you get into the market at a pullback, right? And so at this point is where I would personally enter my trade so that I can make money from the market going up from that point, right? So usually it'll be something called like a POI, a point of interest, an area in the market right here that you might have seen previously that let you know, okay, if the market comes back to this point, that's where I'm going to enter. I'm going to put my stop loss right here at the previous low, and I'm going to make money from the market going up. Same thing right here. If I'm looking to get into a trade for a sale, right, we might be looking at it right here, but I need a confirmation that, okay, boom, it pulled back, but it did not break this previous high. Right. So because it didn't pull all the way back here and continue forward, I know that this thing is going to continue to drop. So I enter my trade here and I make money from the market going down. Right. So that's pretty much why you want to buy and sell in that specific trend of the market. Right. And this is where you want to get in. You want to enter at the pullbacks. Right. So let's keep it pushing. Now, when it comes down to the start of making money, right? Drop one in the chat box below if you're here to make money, right? If you started trading, you started investing because your goal is to make money. All right, I should see the chat flooded out with ones. Perfect, perfect, perfect. But in order to make money, what do we first need to do, you guys? We first need to become educated. We first need to learn. We first need to understand. So let's talk about the understanding of making money. First, when it comes down to it, you guys, I talked about this also within the IBO training. Business and investing is kind of sort of the same thing, honestly speaking. When it comes down to starting off as an investor, you need capital, right? And this is why some of us, I tell you guys, boom, you want to get to that point where you're making that extra money from the business so that you could get better results on the investing side. When it comes down to capital, the amount of money you have to start off with as a trader will determine the type of results that you get or that you should expect to make. If you only got $50, you should not be expecting to make hundreds of thousands of dollars. You shouldn't even be really expecting hundreds of dollars. If you got $50, you should be expecting to make $5, $6, $7, $2, $3, right? If you must start trading right away, you could begin with as low as $100. But for a little bit more flexibility, you would need a minimum of $500, you guys. But recommended income for competitive income, I know some of you guys, y'all want to be full-time investing. Y'all don't want to work your jobs anymore. You want to trade and not have to work for anybody. If your goal is that, you guys, you must have a $5,000 account and above. Right? Because what is your job paying you? When it comes down to how we trade with a 30% weekly goal, right? And that's, I'm gonna be honest, that's high. That's a high goal, right? So even 10%, 15% in a week is amazing because the money that you have in your bank account, I don't care how much you have in your bank account, that money is not growing by sitting in your bank account. So 1% is great, right? Big shout out to Asia, right? I still have to drop it. Asia grown her account over 30%. Within only her second week trading, had her first $100 day, right? Had her first $100 day. And understand, you guys, that the results that you get is going to be based off of your account size. So if our goal is 30% and you only got $100 account, 30% of $100 is $30. You're not quitting no job anytime soon, only making $30 in a week because you only have $100 account. 30% of 500, right? That's, what is that? 500, I think it's like 75, I think. 30%. It's 150. I'm off. I was supposed to add the 75 plus the 75, right? 75 plus 75. Think so. Yeah, 150. Okay, I was half off. So when it comes down to that $500 account, that's only $150. Are you able to quit your job with just $150? I don't think so. But the extra 150 on top of the money that you're making at your job could be very, very beneficial. And then, like myself, I was making 150 minimum a week with $1,000 a month income. So that plus 250 from being a P1000, I was able to walk away from my job. I was having $1,000 days too, $600 days. So it was like at that point I was able to. But even then, you cannot just solely depend on a trading account with only $500 in your account. Now, if you got $5,000 in your account, that's $1,500 weeks. You could quit your job with $1,500 weeks, right? Some of y'all don't even make $1,500 in a month based off of the 9 to 5 that you work, right? Most jobs, they pay about what, 15 an hour now? If you work 40 hours a week, right? 15 times 40, that's $600 a week. And then you're not even getting the full $600 because of taxes. But let's just say y'all getting good money. Y'all make $23 an hour. You still work $23 an hour, 40 hours a week. That's $920. That's still not $1,500. After taxes, you're probably only going to get $820. You're probably only going to get $830, $840, right? So when it comes down to starting off as an investor, before you could really expect to make a lot of money, your first goal is to get to the right account that is going to qualify you to make that money that you're looking to make, right? Drop how much you want to make a week at trading in the chat real quick. Let me see. Y'all drop it in the chat. Let me know how much money you want to make a week. Like, what's like your first goal? Like, man, I want to get to this point where I'm making this amount of money every week trading. I see $500 a week, right? 25K a week, $1,000 a week, right? So what do you need to do? You need to take the goal of what you want to make a week, right? We're going to take the $1,000 a week and you need to divide that by 30%. That means if you want to make $1,000 a week, you need to at least have $3,333 in your account. Somebody said they want to make 5K a week trading. So guess what? You need to take that 5K and divide, right? 5K, divide 30%. From that 5K, you need at least $16,000 in your trading account to expect to make 5K weekly. So what should your first goal be? Not making 5K. Your first goal should be, how can I get $16,000 in my trading account? If your goal is to make, I seen even a 25K. I seen 500. Let's do 500 because that might be more feasible for everybody, right? 500 a week, right? If my goal is 500 a week, and I need to have at least $1,600 in my trading account. If you only got 100 right now, if you only got 200, if you only got 300, your goal should not be, oh, I need to make all of this a day. I need to make this amount a week, right? I'm gonna give y'all answers because, you know, I see some other people drop their goals. So let me tell y'all how much y'all need, right? To make $850 a week, you need at least almost $3,000 in your account. My first goal is $750, right? You want to make $750 a week. Your first goal is not making $750 a week. Your first goal is having $2,500 in your account. Does that make sense, y'all? This is why a lot of people don't reach their goals, because they're focused on what they want opposed to what they need to get what they want. They're focused on what they want more than what they need to get what they want. Oh, I want to drive to Chicago, but I don't have any gas in my car. How am I going to get there? Oh, I want to drive them here. I want to fly here, but I don't have money for a plane ticket. I'm not getting there. You don't have the funds in your trading account. This goal is not going to get reached. So it starts by understanding what you need and making sure that your goals are correct. Your goal is 750. No, your goal is 2,500 or whatever amount it was. So that's how you guys got to think. The reason why most people fail at trading is because they're thinking about it all the wrong way. They think that just because they learn that they should be making money. No, they think just because they show up for the training, they should be making money. No, they think just because somebody else in the chat had a $300 day, they should have a $300 day. No, with trading and investing in business, you're going to get whatever you put in. And you can't sit here and act like, oh, I've been putting in heavy duty work, right? For example, let's talk about Asia, right? And I want Asia to give like a quick testimony before we get off, right? Asia only been in the business 2 weeks. And I seen her get a result that people that's been here 3 months ain't get yet. Why is that? Because she plugs in and applied herself. I asked her, I said, how did you make that? She was like, oh, I was on Steve Morning session. He said, yo, if you're going to take any of these setups, take this one. She said, I took it. Then she said, I was looking at the harmonic scanner after your training, and I looked at this, and this was adding up. So I got in. All she did was plugged in. It's other people that's like, oh, I've been here 2 months, and they think that they should be having $100 days. It's not about how long you've been here. It ain't about how many trainers you hop on. It's about the work that you do behind the scenes, the practice that you put in, the plugging in, right? I shouldn't have to text you and tell you this meeting is live, that meeting. That's not going to help you win here. What's going to help you win here is you waking up daily and making a decision to take action on what's going to help. Oh, Josh doing the training? Oh, I already know. I seen it. He dropped it yesterday. I'm on it. My alarm is already set. So y'all got to really hold yourselves accountable, right? Because I see too many people get into trading and it work. And then sometimes too, it worked for a minute because they're coachable for a minute. They become students for a minute, and then they start feeling like they know everything, and then they start losing everything, and then they give up because they lose it. So what y'all want to do is focus more on what you need to get your goal and plug in as much as you possibly can. Be the biggest student that you can and practice, right? Practice don't make perfect, it make permanent. It's not about being perfect. You don't got to be a perfect trader. And we're going to talk about that as I move on, right? This is the next biggest reason why a lot of people fail in trading, right? I seen a post. It said having a mentor is not about understanding what they did right. Having a mentor is about understanding what they did wrong, the mistakes that they made, so you don't make those same mistakes. Risk management is a big reason why a lot of people fail, because they don't have proper risk management. And I'm gonna be honest with you, I'll be seeing some of y'all drop y'all profits, and I look at your trading account, and you shouldn't have put in as much as you put in. Right? Hitting a milestone, like having $1,000 day, it does not matter if you went about it the wrong way, because if you went about it the wrong way, that means it's not duplicatable. Understand, you guys, write this down. You want duplicatable success. You don't want a lottery ticket. You don't want a luck. You don't want luck. You want something that you can consistently do. And what you can consistently do is look at your trading account size and say, okay, this is how much I should invest every time. That's a consistent result. And this is another thing too, right? And I'm gonna talk about this later on. When you're investing, your risk and your reward has to remain consistent. You can't just say, oh, this one look good, so I'm gonna put in more. And then, oh, that one don't look too good, so I'm gonna put in less. The one you put less in probably was the better trade setup, and the one that you went all in on was the bad one. And so now, because you put more in on that one, you lost more. And with that one, you only put in a little bit, so you only gained a little bit. So you didn't even gain your losses back. Proper risk management is one of the most important things that you guys need to master when it comes down to being an investor. It's not even about understanding the charts. I was very profitable copying and pasting. I didn't care to understand the charts. Could I be honest? When I got started, I was like, yo, I want to understand the charts. I want to get this, and I want to be able to know this so I could pass it down to my kids. Then I realized, Josh, you too broke to be trading. Being honest. I'm like, Josh, you're too broke to be trading. Like, yeah, keep trading, keep making money, keep taking trades, but your focus right now is not how much money can I make trading, because you don't even have a lot of money in your account. I was having $5 days, and everybody else on the team having $10,000 days, $6,000, $5,000. And I'm looking like, yo, what am I doing wrong? What I had different from them was my account size. And that's why I tell y'all, like, you want to get to a point, even if you got a job right now and you got bills and your bills are matching what you're making, you need another stream of income if you really want to take investing to that next level. Right? You got to have money to invest. So a lot of people think that it's about understanding the chart, having all of these different strategies in their mind and being able to recite all of these. People be coming to me talking trading, bro, and they be using all these different words and terminologies that I don't even care to know. They be like, oh, you know this strategy? No, I don't. I'd be like, explain it. How does it work? I'm like, oh, that's smart money concept, bro. Like, you trying to use, it's all these YouTube traders, gurus, they all trying to act like they know something different than the next person. I don't care to be the smartest person. I care to get money. And proper risk management is going to help you make more money than the person that think they know everything. because they know all of the strategies, but they don't know how much they should be putting in. So they losing and winning, and they losing and they winning, but you know how much to put in, and your losses are wins. And I'm gonna show you exactly how your losses could be wins. Right? When there's no proper risk management, there is no safety. People are, oh, I did that before. I lost everything. You lost everything because of yourself. Nobody told you to put all that money in. Nobody told you to take that trade and not put a stop loss in. You lost that trade because of yourself. It wasn't the company fault. That's what I hate about people that be like, oh, this, that, I tried that before. Bro, it was not the company. It was you. It was not the education. It was you, right? We all got to take accountability. And risk management is the biggest form of accountability. Next, let's talk about lot sizes. A lot size is a conversion of currency units that express how much money you are investing in a single trade, right? So for example, if you take a standard on your MetaTrader 5 is going to look like a 1.00. How much is that? That's $10 per pip that the market moves. That's 100,000 units in the market. A 0.10, that's $1 per pip. That's 10,000 units in the market. A micro is a 0.01. This is the smallest one you could use. We don't have a broker that allows you to do nano lots. You cannot put in a penny per pip. That ain't no money, y'all. I'm telling you, like, you gain 100 pips and you only put in a penny. How much money you gonna make? Let's talk about it. Right? Let's see. I think that's like what? Not. So you catch 100 pips and you do a penny lot size. Y'all, you only gonna make $1 off of 100 pips. That's crazy. So we don't do nano lots. We don't even have the ability to take a trade for a nano lot, right? Micro lots is the smallest lot size you could do, a 0.01. 0.01 equals 10 cents per pip. That's 1,000 units in the market, right? So take a screenshot of this breakdown if you need to. Next, let's talk about how to become a smart trader. Drop a 1 in the chat box below if you want to be smart. You don't want to work hard, but you want to work smarter. So a lot of people working hard trying to learn everybody in the world's strategy. They trying to understand how this person do that, how that person do that, what they doing, what are they doing, what they use, what indicators you use, what strategy you use. Forget that. You don't need all of that. You just need to be smart about your investments. So now let's talk about it, right? You only want to risk 3 to 5% a day. The formula, right? The formula to risking 3 to 5% is your account balance multiplied by 0.03 or 3% if you got the percent sign on your phone, right? Or a 0.05 or 5%. That is the most you should lose. So for people that be like, Josh, I lost 200. How much you have in your account? 200. How did you lose everything? How? Right? Somebody who doesn't really care, nobody gotta drop how much. Somebody let me know how much money you got in your trading account. Right? You ain't gotta feel no type of way. If it's $100 account, it's $100 account, if it's a $50 account. I don't think nobody got a $50 account. Somebody let me know. Give me your account balance. Come on, y'all know what's in y'all account. All right, $100. Okay, so if I got $100 in my account, Chase said 4,000. So I'm gonna do both of y'all example, right? Somebody got 100, somebody got 350, somebody got 4,600. So if I got $100 in my account, okay. If he filled out the form, then all right. So boom. If I got $100 in my account, let's do it. If I got $100 in my account, my goal from my iPhone is to multiply that. Take $100 times 3 and then a percent sign. That means in a day, the bare minimum I should be able to lose is $3. The most that I could lose, 100 times 5%, the most that I can lose in a day is $5. So if you are losing more than that in a day with $100 account, you are over leveraging. You are over leveraging. You are putting too much money into your trades. This is how you save yourself, right? I seen somebody said 350. I got 350 in my account. I multiply that by 3%. The most I should lose in a day is $10.50. The minimum, I mean. The most that I should lose is 5%. That's $17.50. Do you know how many days it's going to take you to blow your entire account? If you follow this step, you're never just going to lose all the trades in the world and your account is going to go to zero. You will lose trades. If that's your fear right now, I'm going to tell you now, you are going to lose trades, but you don't have to lose all of your money. And if you do, that is you making a decision to not follow the instructions, not follow the formula, not follow the blueprint. 4,600 multiplied by 3%. That's $138. The minimum you should be losing, Chase, is 138. 4,600 times 5%. 4,600 times 5%. The most you should lose in a day is $230. Right? With a bigger size account, that number might get a little scary. But I'm telling y'all, with Chase having a 4,000, Chase, I'm gonna be honest, bro, we gotta lock in, bro, because there's no reason why we gotta get, I want you to be a testimony right now, right? I know you ain't scared. I definitely know you ain't scared, but I'm telling this to everybody, right? Losing $230, if you risking 200, guess how much money you gonna be making? Chase's weekly goal, while you got $100 account, your goal is 30% a week. Your goal is $30. Chase weekly goal is 30%. That's $1,380. Some of y'all goal is what he should be making following the trading plan. $1,380. Right? So you need to follow this formula at all times. Before you take a trade, you need to figure out what you got in your account. What can you risk for the day? Before you take a trade, you don't take the trade and then say, okay, how much am I risking? No, before I take this trade, what can I risk? You don't go to the store. Like, who drop a 2 in the chat box below if you tired of looking at your bank account before you spend money. Drop a 2 in the chat. Right? You go to the store, you got to check your account. Like, okay, cool. This is what I could get. Okay, put that back. Put that back. Put that back. Right? We got to do that. Why? Because you don't want to swipe that card and it decline. So what do you need to do before you take a trade? You need to look at your balance and look at how much you can risk. You can't lose it. You're not here to give away everything. You're here to have safety risk, small risk, right? Your weekly goal is 30%. So now how do you do that? The formula, you take your account balance and you multiply that by 0.30 or 30 and then the percent sign, and that's going to give you your weekly goal. $100 account, your weekly goal is $30. A $200 account, your weekly goal is $60. A $300 account, your weekly goal is $90. A $400 account, your weekly goal is $120, so on and so forth. A $500 account, $5,000 account, your weekly goal is $1,500. So this is the goal, right? This is the risk. This is the risk, and this is the reward that you're looking to get. So the only thing that's in between that is you plugging in, honestly speaking. Josh, how do I hit my goals? Plug in. That's it. Plug in. Plug in. Nobody, like, it frustrates me when I see Caleb being the only person dropping profits. It frustrated me seeing that Asia was the only person to make her 30% that I know of. Nobody reached out to me and showed me what they made. Actually, Corey had like a $400 week with a $2,000 account. So let's see, 2K, he got a $2,000 account. His goal was 30%, 600. So he was like $200 short of his weekly goal, right? But other than that, like, it frustrates me when I see that there's only a couple of people dropping profits when everybody got access to the same group chat. Everybody got the same access to Steve Morning session. Everybody got the same access to the harmonic scanner. You should really reflect that yourself. Every time you see somebody drop profits in the chat and you not profiting, you should look yourself in the mirror and ask yourself why you're not taking it serious enough. Honestly speaking, I'm not saying be upset or hate on them. I'm saying, yo, look, when I see this, it be people on my team making money, and I be like, dang, what I miss? What did I miss? Look at myself like, bro, you gotta plug in, right? So now let's talk about the formula and how to calculate your pips. Like we talked about, let's go back so I can make this make sense. When you're investing, if you do a 0.10, that's $1, right? Asia, you took a trade, and I ain't gonna lie, you over leveraged. You over leveraged, right? But okay, boom. I got, let's say I got a $200 account. Let's talk about it, right? You do a 0.1, that means you're risking $1 per pip. If you only got $100 account and the most you could risk is $3 up to $5, and you take $1 trade, and the stop loss is 30 pips, you're risking $30, and you only supposed to be risking 3 to 5. So let's talk about how to be smart about, reaching your goal, how to calculate your pips, how to figure out how much you're risking, and how to figure out what your reward is, right? Remember, write this down. The formula stays the same no matter what. No matter what. So when it comes down to calculating your pips, I'm gonna show you how to do it manually. Yeah, you could look at TradingView and use the measurement tool. Yeah, you could look at the harmonic scanner and use the measurement tool, but I don't like doing all that. I like to look at the numbers and do it quickly in my head and figure out how much I'm risking. So this is a step-by-step formula that's here to help y'all. Y'all practice this, and once you get your mind fixed on how it works, you ain't got to write it out no more. You're going to be able to simply look at the numbers, line them up in your head, scratch out the numbers that don't matter, subtract and find the difference. That easy. So this is the steps to help y'all build up the understanding of it. So step 1, the 5th digit and beyond does not matter. So when y'all looking at the trades and it says 1.00697 for your lot size, for your stop loss, and 1.936725 for your take profit, the 5th digit and beyond does not matter, right? So step 2, you want to line the numbers up and delete from top and bottom the numbers that match from the left to the right. Just write the steps down. I'm gonna show you an example. Line the numbers up on top of each other like you finna do addition or multiplication or subtraction. Put the numbers on top of each other. The 5th digit and beyond does not matter. And now from the left to the right, like you're reading a book, you're going to match up top and bottom. 1 and 1, delete. 2 and 2, delete. 3 and 1, keep it the same because it don't match. Delete all of the numbers that match. Number 3, once you figure out the numbers that are left after you follow step 1 and 2, you subtract the numbers that are left. The 4th and final step is now where you test your lot sizes to see how much you should be putting in, right? And calculating your risk is far more important than calculating your reward. Because if you're within your risk, every trade that we drop, you're gonna make more than what you're risking. So if your risk is properly set up, then your reward, you ain't gotta too much worry about it, but it's also still good to know I'm risking $5 to make 30. That's cool. I'm risking $5 to make 50. That's cool, right? Drop a 1 in the chat once you got the notes. And don't just sit on calls and take screenshots, y'all. That is the most laziest way that you're not going to understand, because you're not going to go back to those screenshots. You're going to lose those screenshots. You said I lagged. Did I lag for anybody else, or y'all got it? Y'all let me know. Okay, so like what I'm saying is, right? Did y'all get that? Drop 1 in the chat box below if you understood that, if you got it. All right, don't take screenshots of this. Write the notes out. That's what's going to help you understand. That's what's going to help you learn, right? You're not going to go back to those screenshots, and taking a screenshot is not taking a mental note. Writing it out is going to give you a mental note, right? So next, let's talk about the next thing. Now, this is a risk example. So before I take this trade, right? Josh just dropped a Euro USD trade. We finna get some money. Yeah, woo, whatever, right? I'm first gonna look at my account balance. Come on, bro. Why does it do this? All right, first I'm gonna look at my account balance, right? We have a $500 account. So my 3 to 5% risk It's $15 to $25. That is the most money that I can lose. It's $15 to $25. So now that I know this, now I could look at the trade that Josh sent. Josh sent a Euro USD sale idea. Now what I need to figure out is, okay, boom, he gave me the entry, right? We got that. He gave me the stop loss. We got that. Okay, boom, we got 2 take profits. I could make money twice off of this trade. Perfect. So now what I need to figure out is, what is my risk? To find your risk, write this down, risk. To find your risk, you need to take your entry and your stop loss, right? To find your risk, you need your entry and your stop loss. The take profit does not matter when you're looking for your risk. Your take profit is your reward, not your risk, right? So entry and stop loss, I'm gonna put a negative, right? This is your risk. Take profit, oh, can't do it like that. Take profit and your entry is your reward, what you can gain, right? So we need to first make sure that our risk is correct before we try to look at what we gain. So we got our entry number, 1.06356. Then we got our stop loss, 1.06650. First step, right? Action. Now what we're going to do is we're going to delete the 6 from the entry and the 0 from the stop loss. Why are we doing that? Because step number 1 said the 5th number and beyond does not matter. So we got 1, 2, 3, 4, 5, right? No, so it's the number beyond the 5th number. My bad, you guys. Right? So we got 1, 2, 3, 4, 5. Boom. So now we're going to delete the 6. So make sure you got that written correctly in your notes. The number after 5th, the number after the 5th digit does not matter. Right? So now we're going to do it to the stop loss. We got 1, 2, 3, 4, 5. The 6th digit and beyond is deleted, right? So we don't need the 6 and we don't need the 0. That's step number 1. Drop a 1 in the chat box below if you got that. And I want y'all to do it with me too, right? Write the steps out. Step number 1, entry, 1.06356. Stop loss, 1.06650. We delete the 6. We delete the 0. Drop a 1 in the chat once you got it. Once I got majority ones, I'm going to continue. I need a couple more. Okay, perfect. So let's continue. That's step 1. Now let's go to step 2. Step 2, these are the numbers that I'm left with, right? We deleted the 6 and the 0. We're left with 5 and 5, right? 5 and 5. Those are the numbers that we're left with, right? So at this point, let me tell y'all too, at this point, it does not matter, right? What number is on top, what number is on bottom. You're either going to get a negative or a positive. It's going to give you the same number. It's a negative or a positive, right? It does not matter. The negative or the positive does not change the fact of how much we're risking, right? So it does not matter which number is at top and bottom. It's easier to subtract if you got the top number, if you got the big number on top, but it is what it is. Step number 2. Now, what was step number 2? We're going to delete every number that matches up from top and bottom, left to right, right? So we're looking at, try to do, boom. We're looking at top and bottom, but from left to right. So from here to here. So we got 1 and 1. We delete that. We got 0 and this 0 match. We delete that. We got 6 and 6. We delete that. 3 and 6, that does not match. So now this is what we are left with. We are left with 35 and we're left with 65. That's step number 2. Step number 2, delete the numbers that match up. You could have easily said 106, 106, you out of here. 35, 65. Step number 3, the final step is now to find the difference of the numbers that are left. And our answer is 30 pips, right? It's 30 pips. So now that I know that, right? Now that I know that I'm risking 30 pips, right? No, let's say this first. Knowing that our max risk, what's the most money we could lose with that $500 account? It's $15 to $25. My accounts, I have a $500 account. So what that means is the largest lot size that I could use to stay within my risk is a 0.08. I can't even do a 0.1 because if I do a 0.10, that's $1. If I risk $1 times 30 pips, I'm risking $30. That's over my risk. My max is 25. So I can't do a 0.10. Let's say I tried to do a 0.09. A 0.09, which is 90 cents. I take 30 pips times 90 cents. That's $27. That's still over my limit. My limit is 25. So I bump down from a 0.08 to a 0.07. I mean, a 0.09 to a 0.08. That 0.08, a 0.08 is converted into 80 cents. We take 80 cents and we multiply that by 30 pips, and we're risking $24. Drop a 2 in the chat box below if that makes sense. And if you have any questions, let me know now. Right? If you have any questions, if it makes sense, drop a 2. If you have a question, drop a 3. If it makes sense, drop a 2. If you have a question, drop a 3. Y'all gotta hurry up. I got stuff to do. I'm trying to, make sure that y'all understand this. Okay. Jared, you don't really have the FRX Academy, bro. But I'm gonna still let you unmute and ask your question. But I'm pretty sure if you had access to the FRX Academy, that question might not be. But real quick, go ahead and ask your question, bro. I'm listening.
Can you hear me?
Yeah, I can hear you, bro.
All right, so sorry, yeah, you're right. You're absolutely right about that. There's so much that I wanted to ask actually, but you can go ahead and carry on.
No, go ahead. You can ask it, bro. You can ask it. If it's simple, I answer it. If it's, then I'll let you know.
Well, yeah, it had to do with like the numbers that you were just talking about earlier. If you don't mind pulling back up the chart, I just wanted to look at it again.
You said pulling up. Which numbers?
Yeah, so yeah, those ones. You said sorry, give me a second.
I could wait for like another 60 more seconds, bro. You might be at work or something.
Go ahead, Josh. You can carry on. Sorry about that. I got something coming up right now.
Okay, are you able to look at the screen and watch this quick explanation?
Yeah, for sure. Go ahead.
Okay, so when we drop trades in the chat, you guys, right? This is for everybody and mainly for you, Jared, right? The numbers that I'm going over right now is based off of a trade that was dropped, right? So for example, we got the green line. This is our entry. So this is the number that we're telling you guys to enter the trade. We have these idea goals. These are our take profits. These are the goal of where we want the market to go. Then we have the invalidation level. That is our stop loss. So if we're trying to figure out our risk, we're going to take the entry number and the stop loss number and figure out how many pips, which are pretty much like steps, how many steps in the market is between our entry and our stop loss, so that I know if I put in $1, if I put in 50 cents, if I put in 30 cents, I know how much I'm risking in between this loss zone. So boom, if the market, we looking to get in for a sale, that means we want the market to go down. If the market starts to go up, this is as far as it will let it go before it pulls us out. So now I'm trying to figure out how far is this distance and how much do I need to invest so that I could stay in between my max risk, so I don't lose more money than what I'm okay with if the market hits this stop loss, if the market hits this area where, my limit. So now, and that's what we're trying to figure out. So that's what those numbers are. It's the numbers of where we figured out you should enter the market, where we should put our safety net, which is our stop loss, and where our goals are is our take profits. So I believe that should have probably, I think that might have gave you the clarity that you were looking for. Where is it at? I can't even find the tab that we on. What are y'all looking at right now? Let me actually just stop it. Okay, y'all see the presentation right now? Okay, perfect. So we just went over this. I broke the steps down. Now you guys know why it's important to know. Okay, boom, this is my account size. My risk is 3 to 5% a day. Okay, so now and then also understand, if you take a trade and your risk for the day is 15 to 25 and you're risking 24 in that one trade, you should not take more trades. So what's smart to do is not risk 3 to 5% in just one trade, unless that's the only trade that you're looking to take for the day. If it's multiple take profits, you probably need to break it up, right? So I dropped, for this trade, it was 2 take profits, right? Which means that from my entry, I could make money here and it pulls me out, and I could be in another trade and make money here and it pulls me out. So if I'm looking to take 2 trades to make money twice off of this, what I'm not going to do is take 2 trades for a 0.08, because that's going to double my risk. What I'm going to do is cut this in half. I'm going to take 1 trade with a 0.08, a 0.04, and I'm going to take the second one for a 0.04. Or I could say, boom, TP1 is a smaller profit. TP2 is a larger profit. So I'm going to do a 0.02 on TP1, and I'm going to do a 0.06 on TP2. However you want to break it up, but you don't want to take more trades and higher your risk. So if the most that you could risk off of that trade setup based off of the stop loss, right, is $24, right, based off of that trade setup. So that tells you how much you should be putting into the trade. After filling out the form, it sent him all of the links. So we should have made sure that after he filled out the form that he got the links in his email for the group chats. It's automated. So it's not something that I got to do. It's not something that nobody has to do. He just got to go to that email and click on the links and join the chat. Right? So that's the first example. So now this is an example that I did with the team before. So now this is the trade setup, right? So these are the numbers before we edited, before we did anything to it. All right, this makes sense to me now. Big ones, not bad. Perfect. I'm glad it makes sense. Yo, I'm telling you, I'm breaking it down to a simple standpoint to where it don't even matter if you got the FRX Academy. Like, you should understand it now. All right. So this is the trade, right? Euro USD. We got our entry, our stop loss, TP1, which is our first goal, TP2, which is our second goal. So now what we're going to do is step 1. Now we're looking to figure out our reward. So now we don't need our stop loss, right? Our stop loss gave us what we needed. We know what we're risking. We could do a 0.08 or 2.04s for our risk, right? So now we got our risk figured out. We don't need the stop loss anymore. Now we need our entry and we need our take profit 1 to figure out how much money we can make off of our first goal. So let's clear this and let's do it, right? So we need this number and this number. Notice, right? 1, 2, 3, 4, 5, 6. 1, 2, 3, 4. Okay, both got 6. All right, cool. So now what is step number 1? Somebody unmute themselves and tell me what step number 1 is.
Delete the last number.
Delete the last number, right? So what did we do? We deleted the 6 and we deleted the 0. So what are we left with? 1.0635, boom. 1.0558, boom, right? So somebody different, tell me what the steps for step 2 is. What do we do now? This what shows me who really paying attention. What do we do for step 2? Unmute yourself.
Get rid of the same numbers.
How? What do you mean? All of the numbers that are the same? What's the specifics?
The ones, the zeros, and that's it.
Okay, so when I said what I meant by be more specific is like, let me know. So from left to right, because we could have said delete the same, and I could have been like, it's a 5 here, it's a 5 there, and it's a 5 here. You know what I'm saying? So we want to be very specific. You understood it, but I was just asking for them. So now, boom, exactly what he said, right? That was correct. We're going to delete the same numbers from left to right. We're going to delete the ones. Ones are gone. We delete the zeros are gone. Now what are we left with? 635, 558, all right? And now Asia and Ray household cannot answer no more questions, right? Y'all probably was helping each other with that. No, I was just playing. But okay, boom. Step number 2, right? What do we do from this point on? Somebody else. Come on, y'all. Don't make it make too much sense why Asia made $100 the other day. Kayla Robinson, what do we do now? If I call on y'all and y'all not answering y'all, I'm gonna remove y'all from the meeting. If y'all don't know, then say that so we can explain it. But I don't want y'all holding nobody up. Kayla, are you able to talk? All right, Shania, unmute yourself.
Hey, my bad. I'm at work right now trying to multitask.
Okay, so do you remember what we do for step number 3?
Honestly, no.
It's right here.
I'm gonna be honest.
We subtract, right? So step 3 was subtract the numbers that we have left from step 2. So step 2, we left with 635, 558. We subtract the 635 from 558. Right. So what that lets us know now, right? We already figured out what we were risking. Now, if we took the trade for take profit 1, let's say we did a 0.08 on just that one trade, right? We took take profit 1, we did a 0.08, we risked $24. This trade TP1 gives us 77 pips if we close out, if the market reaches there. So we take our 77 pips, we multiply that by 80 cents, that's $61 profit, right? Right? So $61 profit. So now, I think I gave a different example, right? This was another example. So let's just say Chase was to take this trade, right? With Chase's account size. So now, let's just say, boom, we got an account size of $4,600, right? That's our account balance. Why I didn't just click on the one that I already made. Account balance, right? That's what we got. Oh my goodness, bro. All right, so we got his account balance. Y'all get it. It don't got to be lined up perfect. His account balance is that. Now, with his account size, right, his 3 to 5% is so 4,600 times 3%, 138. So he could risk 138 in this trade. 2, 4,600, his 5%, which is $230. So now with this trade, he's taking we're risking 20, what was it? What was the risk? 30 pips, right? We're risking 30 pips. So now let's say, boom, if I took this trade for a $4 lot size, right? I did a 0.04, I mean a 0.40, right? We take this trade for a $4 lot size. We're risking 30 pips. That's only $120. So what does that tell me? I could risk more, right? He take this trade, 30 pips for a $5 lot size. That's $150. That's right in between. Let's say, you know, Chase, he like, okay, I'm gonna be a little risky on this one. I'm gonna get a little closer to my max, right? He decides to do a $7. That's $210. Let's say he decides to take an $8. 8 times 30, right? That's what? 2,400. No, 240, my bad. 240. That's over. So now we know, okay, the biggest lot size Chase can use, is a 0.70, which is equal to $7, right? So let's go over here now. Chase takes this trade with a $7 lot. Slash $7. You're going to multiply that by the 30 pips for the risk. Right? This is his risk. He put in $7, 30 pips. His risk is now 7 times $210. So we did an example of somebody who has a $500 account. Their risk was $24. Chase got a $4,600 account. His risk is $210. This person with the $500 account, their reward was $61 for this trade. Chase takes this trade for a 0.70, which is $7. He takes this trade and he catches 77 pips. 7 times 77. Chase has now made $539 in that one trade. He risked $210 to make $539. Is that worth it? Yes, because it's more than double. It's more than double. That's bigger than a 1 to 2. If he doubled, right, that would be 420. He's over doubling his risk. And I'm gonna be honest with y'all, if take profit 1 looks this pretty, take profit 2 is really gonna get crazy. So let's clear our drawings, right? And now let's go to the second one, right? Let's figure out our take profit 2 now. So drop a 1 in the chat box below if that makes sense. Chase says, sweet. He trying to see that money. Chase trying to see the money. He said, show me the money, right? Okay, so Kayla M. And should I remove those 2 that didn't speak? Yeah. I know Sanaya at work, but what's up with everybody else? Right? Where everybody else at? That's the sad part about these cards. That's the sad, it's a pro and a con. Sad part is, I'm gonna make sure that you really know what I'm talking about. The con is, that's the con. The pro is, if you somebody that's really plugging in, me asking you questions and doing it with you is really gonna help you understand. When the calls get so big to the point to where I can't even call on you and we don't got time to call on you, it's not gonna help you, right? It's not gonna help. But let's talk about it. I mean, it's gonna help, but you're not gonna be able to get the one-on-one type. So now, same trade. We got our entry. We don't need our stop loss. We already know that. We don't need our take profit. We already know that. This is 30 pips. That's an ugly 30. And this is 77 pips. We know that. Now we're trying to figure out what we can make from our second goal, right? So with our second goal, we're going to follow the same steps. We're going to line up our entry and our TP2. Anybody, even if it's Asia or whatever, let me know. What is step number 1? Anybody, unmute. Yeah, I can't keep going to the chat. Y'all just got to unmute. All right, delete the last number. We delete the 6 and we're deleting the 3. I mean, the 6 and the 0. So now we're left with 10635 and 10530. Boom, boom. Next step, we delete all of the like numbers from top to bottom, left to right. We got a 1 here. We got a 1 here. We got a 0 here. We got a 0 there. A 6 and a 5 don't match. We leave it alone, right? And this 0 is not supposed to be here. That 0 is not supposed to be there, right? So we have, this 0 is going to, just so y'all know, we got 635 and 530 left, right? So now we're at step number 2. The last and final step is to subtract these numbers and find the difference. This trade for TP2 is 105 pips. What's up, Jared?
Yeah, I noticed that the three wasn't taken out. Being like number wide's up.
So you stop, right? The 6 and the 5 was different. So you leave it alone from there. You don't skip over. I know exactly. That was a great question, bro. I love that you said that, bro. That shows that you really listening. I love that you said that. So from the first set of numbers that don't match, you leave the rest of the numbers alone. I'm glad you said that because I've never even explained that. Like nobody ever really questioned that. So I'm glad you said that. So because this 6 and 5 is stops, we leave it alone from there. That makes sense? Jared?
All clear, my bro. All clear.
Okay, cool. Perfect. So now what are we left with, right? Now we are left with 635 and 530. We subtract those two, we got 105 pips, right? So if we do this person who got a $500 account, their biggest lot size is a 0.08. Let's say they did not take profit 1 because that 0.08 is giving them their max risk of 24. Like they can't lose $2 extra. They lose $1 extra. That's the max. That's the most they could do. They took a 0.0, took another trade, they would be risking $48 and they can't. So let's say they did not take profit 1. Then that 105 pips times the 80 cent is going to give them $84 in profit with a risk of $24. Right? So now let's go back to Chase's example, right? His account balance was a 4,600. His risk was, what was it? 120, I think. 120 to 230. I think that's what it was. Right. So let's take 4,600 so I can be correct. Times that by 3%, 138. I don't know why I said 120. 138 and 5%. 230. Right. So that's his risk. So if Chase takes this trade, right, his TP1, like I said, Chase could only do a 0.07 total. I mean, a 0.70, $7 total. So what Chase could do, right, and I'm going to give y'all this example, right? So the most he could risk is a 0.07 in total. So we take the 0.70, I don't know why I keep saying 0.07. We take the $7 investment and we divide that by 2. That means Chase could take profit 1 for a 0.35, which is $3.50, and Chase could take profit 2 for a 0.35, which is $3.50 to total up to the risk of $7, which was I think like 210. Yeah. So the most Chase could risk is 210. Max risk is 210. So with that being said, if Chase took TP1 for the 0.35, which equals $3.50 in dollar form, Chase is giving himself the ability to make. TP1 had, let's do this as well. TP1 had 77 pips, right? So we take 77 pips times $3.50. So pips times $3.50. That means, what was the first? Okay, yeah, that makes sense. So now with take profit 1, Chase only can make let's just round it up. It's 269.50. 269.50. Right? 269.50. Now, if Chase took take profit 2, which is 105 pips, and this one, he also took a 0.35, which is equal to $3.50, because the most he could risk in total was $7. Now, Chase is giving himself the ability to make, what is that? 105 pips times $3.50. So now, boom, that's $367.50. So now let's do, right, the risk to reward. So in total, Chase risked a total of $210 for a reward of $269.50. 269.50 plus 367.50. Chase risked $210 to make $637. Right? Does that make sense, you guys? Drop yes in the chat if that makes sense. And this is how you control and make sure that you're not losing more money than what you should be losing. The person, like I gave y'all a big key that I need y'all to remember. You don't take that same lot size for both setups. If the most you can risk is 24 and TP1, one trade is going to risk 24 and you can only risk 15 to 25, that don't mean take more trades. Your 3 to 5% is in a day, not in a trade, in a day. So you might need to break it up. And it's smart that we broke it up, right? Because if Chase lost both of these trades and he took a $7 lot size on both of them, he would have lost $410, way over his 5%. And if Chase just took the first trade, right? He put $7 into the 77 pips. Chase would have only made $539. But because he was smart enough to break it up and took take profit 1 and take profit 2, he made an extra $98. The reason why people don't make money is because they don't educate themselves to understand what it takes to really make money and win. They just want to plug in the numbers and sit on their butt all day and just make money from not doing nothing. You still got to get up and stay at your job for 8 hours. So don't be lazy with learning how to do this, because this can change your life, right? You're going to have to get up and put your time and sit around somewhere anyways. So I much rather spend it understanding this. Right? So this was pretty much a conclusion right here, I believe. I think I was just like, in conclusion, right? My max risk of a $500 account is $15 to $25. If I took that trade setup from my entry to my stop loss, I'm risking 30 pips. My max risk, right, for 2 entries, if I took take profit 1 and take profit 2, is a 0.04, which is 40 cents, right? Because the max that I could do is a 0.08, which is 80 cents. So I broke it up into 2 so that I could take profit 1 and take profit 2. And because I took take profit 1 and hit, I made $30. Because I took take profit 2 and hit, I made 42. So I risked $24 to make $72. Why is this so important, you guys? Because if I took this trade setup once and I lost, I'm losing $24. If I took this trade twice and I lost, I'm losing $48. If I took this trade 3 times and I finally hit, I finally won on the 3rd time, I made $72.80. So I'm still in profit. I could lose 2 times and still win. That's why I told you guys, when you know what you're doing, your losses are your wins. You're 1 loss away from a big win. I took this trade 3 times and lost 2 out of 3. If you go play basketball and you lose 2 out of 3 times, you done. You play best of 3, you lose 2, you done. There ain't no third. You don't win. You don't get the trophy. But here, you could take 2 trades, lose the first one, lose the second one, and finally hit. We lost a total of $48 taking these trades. I wasn't scared. And it's another reason why a lot of people don't win. They take a couple losses and they get scared. And because they scared, they stop trading for the next 2-3 days while we catching the wins. We all lost on Monday. That's perfectly fine. But we still got Tuesday. That's why your 3 to 5% is important. I only lost 3%. I'm good. I got $300, $400 more money left in my account. All right. So the next day I could try again to win. The only thing I can't do is if I blow everything, I can't look forward to tomorrow unless I put more money in. We lose 2 trades, lose $48. We finally hit for $72.80. We still profited $24.80. Our account still grew $24.80. I went from having just a $500 account to right? Asia went through this, right? She lost the first couple of trades. I went from having a $500 account to dropping down to 476 to dropping down to 452 to making all my money back, making all $48 back plus some on top. What's 48? What was the difference? I think like $24, something like that. So now I'm at, it was 20 something. I think it was like 20. So now I'm at a $520 account. Yeah, I took some losses, but understand this too, y'all. Let me give y'all this mindset understanding, right? Whatever you have in your trading account, I tell y'all this, because when some of y'all get started, y'all be worried. I'll be like, yo, the money is yours. You could pull it out anytime, right? You have control to do that. But if you're looking to win in the long run, investing, you only want to pull out what you deserve to pull out. You don't want to have $100 day and pull out all 100. You don't want to have a $50 day and pull out all 50. You don't want to just grow your account $100 and pull everything out. And then when you lose money, it's what the money was there to do. Do y'all know what I mean? Like, yeah, we would have wanted to win, but you put that money in the account for it to be invested. So losses are going to come with that. So what y'all don't need to do is be emotional about the money in the account. The mindset that I want y'all to have, right? And if you got too much money in your account for you to be okay with this, I don't know what to tell you. You need to only put in your account what you're comfortable with losing. Once you put money into your trading account, that money is no longer yours until you have reached your goal and withdrew some money. And the money that you withdrew is yours. You got to take all attachments away from that money. Oh, Josh, I lost $20. So what? That's what it was there to do. It was there to be in the process of losing and winning to help you get to your overall goal. Now understand, y'all, there's people that take that first loss and their account dropped down from 500 and now they scared to take the next trade. Somebody else took the second trade too and they lost that one too. And then they stopped right there. Now they down 48, that person down 24. The other person was like, bro, that's what my money there to do. I'm going to take the next trade and I'm going to keep living, bro. I'm going to keep this what it's here to do. Now they make the $72. And the 2 people who were scared, who was upset, who stopped, they stuck with lost money. The only way you fail is if you quit. The only way this is a loss is if you stop trading because the money could get made back. Right? That's why 95% of the world are working jobs and are self-employed because they scared to risk money. When what you should be scared of is wasting time. 40 hours at your job for a week of work. Next week, that 40 hours don't matter. You're starting over. You start that account with $500. Next week, that account is grown or it's a little bit less, but it's still got the potential to grow. The work that you put in, the hours you put in the past has no potential to pay you, no more. You have to change your mentality of money, you guys. This, all right, this is a little change from my haircut. This, he ain't tired. Look at how beat up this dollar is. I want y'all to really listen to me, right? Look at how beat up this dollar is. Y'all see that? This money has been working. This thing probably done been in Florida. This thing probably been in Texas. This thing probably been all over the world in the past week. Once he over with, he over with. Me? I need to preserve myself, not this. You don't care. You should not care about this. Is paper. Really, it's made out of cotton and linen. It's not even really made out of paper. It's made out of a paper-like material, but it's made out of cotton. And for those that look like me, that should really make you feel some type of way about money. If y'all know, you know, right? History. Slaving for cotton, still slaving for cotton. It's crazy. Put this to work for you. Stop stressing about this. Stop crying about this. Stop complaining about this. When you get better, more of this comes. Money knows who to go to. They said that if they broken and distributed all of the wealth to everybody, I'm talking about no more rich people, everybody got the same amount of money. Do you know that the money is going to go right back in the same hands? Why? Because they know what to do with it. So instead of crying about losing this today, losing this tomorrow, losing a little bit more next week, understand that you are in a process of understanding what to do with this. So now when you got a lot of this, you know what to do with it. Y'all feel me? Let me know. Yes or no. All right. It just said, I'm glad I ain't quit after that. No facts. Bruh, do y'all know? Let me tell y'all this story real quick and I'm gonna stop recording. That's the end of this training, y'all. For anybody watching the recording, if you have any questions, feel free to reach out to me. But yeah, let's get it.